Hello, everybody. Welcome to the Parallel Systems broadcast. I'm your host, Mike. And on tonight's show, we are doing a silver special. Yes, you heard me right, my friends. It's all about silver tonight because silver has hit $64 per ounce. It's breaking out to the upside. And in a fiat Ponzi scheme like the one that we live in, you cannot have silver breaking out above 50 bucks. It is not allowable, but that's what's happening. Things are going to start to break because silver is a tiny little market. It's one of the most important metals in the world. They've been suppressing that price for decades and decades on end, and now the price has broken out and there is a physical shortage in the world. Well, not right here. I've got a coin right in my hand. You can see this is a French 10 franc coin. This is from 1967, and my wife bought this for my father-in-law for Christmas. So we managed to get one of the last pieces of silver available in the world. You better get your silver because it's going to become unobtainium very fast. Now, I've been buying silver coins for people for Christmas for many years, and you know what the fantastic thing about that is? The coins that I was buying people 3, 5, 8 years ago, many of them have gone up at least 100% in value. Some of them have gone up 300, 400% in value. So those people who got those silver coins as gifts have been getting richer. You can't say that for many things in this day and age. Now, I'm going to be sharing with you a graphic that I showed the other day. This is one that Matt Bracken has been sharing on his X account. He's a great follow, so go check out Matt. You can also find him on the Coffee and a Mic podcast. He's often interviewed there, and he's been on my podcast too. Now, this shows you just how quickly we have been robbed, and I'm going to show you, actually, it's speeding up now. We are going into the end game. We are being robbed, and it says here, inflation doesn't just happen like the weather. We were robbed. In 1964, the minimum wage was $1.25 per hour. And that equated to 90% silver quarters. Because remember, back in the early part of this century, you could actually get paid in real silver. This was from 1967. This was circulating around the economy. You could go to a shop and spend this silver. And if you was a shopkeeper, you could be paid in silver coinage. Now, of course, they took silver out of the money supply and they replaced it with dog shit fiat currency. And that's what we've been living with. And that's where the real trick comes in. That's where the black magic, money magic begins because, of course, they inflate that currency to oblivion. And you don't know that you are being robbed silently every single day. Even when you're asleep, there is a sneaky little man from the Federal Reserve or the Bank of England sneaking into your bedroom and pickpocketing you whilst you are sleeping. Did you know that? Well, look out for it tonight because it's happening. And it says here, in 2025, with silver at $55 an ounce. Now, this is the crazy part. I only shared this graphic a week ago. It's already gone up another 10 bucks. That's absolutely crazy. And you know what? It's scary too, because we know that in a fiat Ponzi system, you cannot have silver breaking out this high above $50. It's not allowable. It's not acceptable. It will break the system because there's so much shorting going on with silver and there's only a tiny limited supply. I managed to get my last little bit of silver right here. Did you? Because soon you're not going to be able to get it. There is a limited supply. It's a tiny market. The entire world needs it. And if silver is breaking out to $64, if gold is up at $4,200, $300, that is your warning sign that we're getting very close, very, very close to the end game. Now, it says here, in 2025, with silver at $55 per ounce, remember, it's gone up. 5 pre-1965 quarters are worth $51. So back in 1964, you was being paid in 5 quarters. Now those 5 quarters are worth $51. So if you was still being paid in that silver, you'd be very wealthy. You'd be getting paid $51 an hour. But that's not what's happening. In real terms, the minimum wage has not gone up. The value of fiat paper, the Federal Reserve dollar, has gone down. And if you look to the right of this, 1970s, nice little house there you could get yourself. That was an American starter home. 1990s, it was like a prefab. 2010s, yeah, I actually remember those days too. I was living out of a van for a little while when I was a runner. I was sleeping in the car. 2030s, rucksack, machete, and if you're lucky, a shotgun. If you're not, then it's only machete. In fact, I've seen a lot of those machetes in Great Britain right now, so it's already happening. Now, I wanted to move on to this presentation here. In fact, I'm giving you the best bits right away. Let's go to this presentation. I released this about 3 years ago. It was one of the first presentations I made for my channel. I updated it in March 2025. So earlier this year, I updated this. And the reason I want to show you it again is just to show you the catastrophic destruction of wealth, the looting that has happened just this year in terms of your real salary and your living standards, which are going down into the gutter. Now, let's go all the way back to 60 AD to begin this one. Back then, a Roman soldier, yes, a legionnaire, look at that guy. He was one of the good ones, a legionnaire. He was being paid 28 ounces of silver a year or 3.9 ounces of gold. That was his annual salary. He could live very comfortably on 28 ounces of silver per year. It was 225 denarii, but I've done the conversions. His annual food cost was 7.5 ounces of silver or 0.8 ounces of gold. And his pension, when he retired after all those years slaying the barbarians and finding pretty women to kidnap and take back to his farm in Rome, he was getting paid 250 ounces of silver for his pension and 27.7 ounces of gold. And the gold to silver ratio back then was 9-1. Now, this is just mind-boggling to me. If you fast forward 1,000 years into the future, you are now a medieval serf. Sorry, you're a medieval serf now. You've gone down in society, but even a medieval serf, a porter, as I've put it here, was being paid 4.7 ounces of silver or 0.5 ounces of gold. So 1,000 years, there's been pretty much no inflation in salaries. And if we look at the salary of a master mason, which I guess would be more equivalent to a legionnaire, you can see that, yes, his silver salary has gone up. It's gone from 7.5 ounces to 48, but the gold salary is pretty much the same, 3.9 to 4.83, which really, I guess, indicates just that they become a little bit more efficient at mining. That's true, likely, and maybe the standards of living was just better. So the salary's gone up a little bit, but it's not crazy. That means over 1,000 years, using real money, there was very, very little inflation. And the gold to silver ratio actually popped up as well to 10-1. So they did become more efficient. Now, check this one out. We're going through history from 60 AD to 1060 AD to 2025 AD. And it should actually be AD. So 3.9 ounces of gold, 4.8 ounces of gold. And then back when I first made this, which was only in March this year, it was 4.9 ounces of gold. This was looking at the medium salary and 426 ounces of silver. Now, something crazy happened here because you was getting a lot more silver in 2025 than you was 2,000 years ago, 1,000 years ago. So clearly something went wrong with silver, but gold, you was actually being paid pretty much the same. Now that, again, is mind-blowing because it means that gold has retained its purchasing power over 2,000 years, my friends, which is what I've been telling you all along on the channel. Now, this was March the 31st, 2025. So we're talking just a few months back. Now, let's look at the next slide and see what's happened just in the past 6 or 7 months. Let's go to the next slide. Look at this. The bottom one is what you need to look at. 2025 AD. It's gone from 4.9 ounces of gold to 3.5 and from 426 ounces of silver to 264 ounces of silver, which is showing us the increase in value in the metals, or put another way, the collapse in value of your dollars, your pounds, your yens, your euros, those shitty fiat currencies, they are collapsing. So you can see the middle class is dying. And, you know, another part of this was an original presentation talking about a 3-4-5 strategy. This was my answer when somebody said, Mike, where do I start? Where do I start? And I used to say to them, start with a 3-4-5 strategy. Get 3 months salary in cash, 4 months salary in silver, and 5 months salary in gold. That's a really good starting point. Now, I did the first presentation about 3 years back, and between the first and the second, you can see that there was a collapse in the value of the currency because firstly, the salary went up from 33,000 to 37,500. So the median salary went up, but it bought you a lot less gold and it bought you a lot less silver, which is what I always tell you. Nominally, things are going up, but in real terms, everything's collapsing versus the precious metals. And you can see here it collapsed, not just a little bit, but a lot. 33% in terms of the 4 month salary, 31% in terms of gold, 16.5%. Now I've updated this again. Average UK salary, has gone up from 37,500 to 39,500, but it only gets you 9.2 ounces of gold. 60% decline in less than a year. That is catastrophic, my friends. So that's what I wanted to discuss on tonight's show because, yes, it's a time to celebrate. It's a time to celebrate that silver is doing what we all knew it was going to do, what we've been saying here on the channel for some time. And in fact, there's a slide that I think you're going to like that I'm going to have to get back on the screen. Let's get back up to this one. So this is a slide that I included in my last presentation. Again, March 2025. Minimum wage USA, $15,080. That's not changed. And it equated to 426 ounces of silver or 4.9 ounces of gold. Guess what it is today? 264 and 3.5. Again, you have been wealth stripped just in the last year alone. And here we go. This is where it goes to the coming financial reset. Gold to inflation adjusted all-time high, 28,000 an ounce. I think it's going to go higher than that. Personally, I've been predicting that a long time. Silver to gold ratio, I think it goes down to around 30 to 1. So looking at my conservative estimate for gold, that's $933 an ounce. Dow to gold ratio, all-time low of 1. I think it's going under 1. Annual food costs, I think it will go all the way back to what it was for the Roman legionnaire. It will be around 7 to 7.5 ounces of silver. Now, many people would have said that was crazy. They said, Mike, you're crazy. You've lost your mind. You need to go take a walk in the forest and take some deep breaths. But that's not true. I haven't lost my mind. You can see the gold to silver ratio is correcting. Right now, it's 72 to 1. What's going to happen when they run out of silver, when they realize that the system has been gamed, the paper markets are a fraud? There are hundreds of claims for every single ounce of silver, which is just vanishing. It's going to vanish because everyone's going to take the real metals out. And all that's going to be left in the vaults are stacks of paper. JP Morgan owes Deutsche Bank 5,000 tons of silver. Deutsche Bank owes Morgan Stanley 200 tons of silver. Morgan Stanley owes the Bank of England 5,000 tons of, and on it goes. You can see my point. That's what's going to be happening. There's going to be nothing there but paper in the vaults. And I think we're getting there very fast now. In fact, I've got another piece of silver here. Check this out. I don't even know what this is. This was some kind of serving tray, I think. It was what we call junk silver. It was probably quite expensive silver before I broke it because it was some kind of antique, but I really like to bend it, and I bent it so much it broke. But guess what? Even my broken antique junk silver is worth some money. That's still silver. I could still use it to trade, barter, buy myself some fresh farm eggs, buy myself some chickens or some cow's milk. And yeah, I think we're getting there. Going back to Matt's graphic, 2030s. Do you think that that's a joke? Do you think that that's not real? Or do you think that there's a potential that we are actually going into the financial reset, that is what they've been setting up for, and that gold breaking out, that the yields in sovereign debt, the Japanese 30-year bond, record all-time highs. We've got the 10-year bond now at levels we haven't seen since 2007, 2008. Bond yields breaking out across the world. Nobody wants the sovereign debt, and the Federal Reserve has just done what? They've said, we're going to reduce rates into the biggest, largest, most overvalued bubble in world history. Do you think that's a good idea? Or do you think it's going to destroy the value of the currencies? Further still, 60% decline since March. Just worth repeating, 60% decline since March. I'm going to be sticking with my junk, with my crappy silver, thanks, not those Federal Reserve notes. Now, the other thing that we have to factor in is the Federal Reserve have also said they will start reserve management purchases this week, beginning tomorrow. So look out below. Buying $40 billion of treasury bills until at least April. So is that something that you would do if things were looking good? Because that's what Powell was saying. Everything is just fine. And then he goes on to say that they're going to be starting $40 billion treasury bills. What's that going to be? Daily? Hourly? We'll wait and see. Powell clarified that it was going to support their next policy decision, front-loading the next few months of purchases to get through tax season. This sounds like a lie. This sounds like they are panicking because they know that the everything bubble is deflating. The AI narrative has fallen like a stone in the sea. We've got metals breaking out. We've got the red flags everywhere, and people can no longer afford to live. That's the other part, is inflation is destroying the working man and working woman, they're getting angry and they're looking at the Trump presidency and saying, you promised to fix this, and it looks like all you've done is fix up some bribes and bungs. So that's not going too well. Now, Michael Burry left a nice note on this. He said, if the US banking system can't function without 3 trillion in reserves life support from the Fed, that is not a sign of strength, but a sign of fragility. So I'd say US banks are getting weaker way too fast. Seems that after every crisis now, the Fed needs to expand its balance sheet permanently to guarantee a bank funding crisis or guarantee a bank funding crisis. No wonder stocks are doing well. Now, I've studied past periods of hyperinflation. Let's go back to the French hyperinflation. Guess what? Stocks did well. Stocks did fine, only nominally. So, yeah, the stocks are going to go up, but they ain't going to go up and give you real returns. Not unless you manage to find the right Ponzi stock at the right time and get out before it blows up. So if you're just looking at the stock market, you ain't getting real returns. Since the year 2000, the stock market has underperformed gold massively. Gold's up 1,500%, 15 times. The stock market is up around 350%. That's not good. That's not good at all. So the stocks ain't going to work. Even if they go up nominally, they may protect you slightly if you can't figure out a better strategy. But I would say buying encyclopedias is probably a better strategy at this point. Buying old rare books, buying, I don't know, rusty screws. Maybe your neighbors are going to need some. They ain't going to need some fiat notes once they hyperinflate. Now, what else could you be buying? Well, of course, you could be buying the precious metals. And now silver is playing catch up. And don't forget, silver has a long, long way to catch up. If we go back to the 1970s bull run where gold went up 23 times in a decade, silver also went up massively. By the end of the decade, it was up to $50. But guess what? Since 1980, which was the nominal all-time high in gold from that decade, gold's up over 4.5 times since then. But silver, it's only just equaled. Only just equaled. So what does that mean? Well, it means that silver has to go up to over $250 an ounce just to catch up to gold. And gold's going to keep running. It ain't stopping. It's not turning around. It's not going the opposite way around the running track. No, it's going to get faster because they're responding to currency debasement. That's what precious metals do. And if you go back to that French hyperinflation, guess what the best performing asset was? In the 1700s, yes, you guessed it, it was gold. Bonds collapsed, stocks went up, but only nominally. In a hyperinflation, stocks do go up. Go back to the Weimar hyperinflation, go to the Zimbabwean hyperinflation. The stocks go up, but they don't buy you anything when you cash them in. Now, that's what's going to happen to your pension. That's what's going to happen to your 401ks. You might see the numbers go up, but actually in real terms, you are being well stripped. Daily, nightly, in between, you're being well stripped. The same with your house and property price. We're in a massive property bubble. The house prices keep going up. If you go back to the UK in the year 2000, the average UK house cost around 750 ounces of gold. Today, it costs around 125 because of the uplift in gold. So what does that mean? It means your house price has collapsed in value. On paper, it's gone up, but in real terms, it has collapsed, just like I showed you with my presentation. We're all being well stripped, so we better go out and buy some more junk. I'm holding on to my little junk handle and my flapper, not sure what it is, but that's what we need to do right now is get prepared, and I think you really need to get prepared on a very visceral, practical level too, which is why I live on a farm, of course. You want to be getting yourself some chickens, you want to be getting yourself some goats, you want to be planting some fruit and vegetables, because if you see what's happening and you think that they are going to take this to its logical conclusion, which every era of history tells us is where it ends up, with a hyperinflation, with a currency collapse, and then a massive Great Depression, you better get yourself on a farm. You better get yourself surrounded by other farmers, and you better get away from the cities, because those cities are not going to be safe. They're going to be dangerous. There's going to be millions of people, no food, no water, no energy. And it's going to be chitty chitty bang bang in America because there's lots of guns too. In Europe, it's going to be swooshing machetes and people from every culture on every continent all merging in the city to have a free-for-all Hunger Games. That's not what you want. So actually, beyond the metals, probably before the metals, you also want to be thinking about how do I get myself ready for what these clowns are about to unleash in 2026? Because it ain't going to get easier, it's going to get worse. But if you're in the right place, in the right society, surrounded by people who are smart and intelligent and not as exposed to the system, you'll do just fine. You can get on with living. You can buy a boat, maybe go sailing. That's another option. Go sail, come back in 10 years, see what remains of the ashes and embers that are on the ground. This is the time. It's the time to really start thinking. So, with that, my friends, please let me know in the comments section what you think of the breakout in prices. Are you celebrating or are you commiserating? Because you know it's a signal that things are about to get really messy really fast. As always, thank you for listening. Please check out my Substack. I do have an article in which I actually lay out how Europe is now setting up to trigger the Great Taking through their seizure of Russian assets, which they're about to put up as collateral for loans which Euroclear, the central depository, has said will likely bankrupt them. Bad times ahead. In closing, take care of yourselves, and I'll see you in the next one.